Good evening, one and all. Let us today see what are all the issues with respect to non-corporate entities preparation of financials. This presentation is primarily focused on only the non-44AB cases, that to individuals. Many may wonder that what is the issues in those small cases. Let us start one by one. We will see the various issues in three different buckets. One, what is the purpose for which the financials are need to be prepared, and how to prepare, that is in the preparation stage, and presentation. What is the presentation requirement as such? Let us move into the first bucket, purpose. Mainly the purpose for preparation of financial is for tax filing. Most of the assessees come to us, the non-corporate individuals come to us for tax filing. Next is for availing finance. For the purpose of bank finance, they may require a financial certified by a chartered accountant. And as per Reserve Bank of India requirement, any person who has availed finance more than 25 lakhs need to get his accounts audited. This is one of the requirement. Next, we shall move to the issues in the tax filing. So when we see the purpose, let us see the issues in the tax filing. One of the issues is ascertaining the turnover. Wherever 4480 cases are there, most of the clients provide the turnover, and that turnover has been taken as per the computation of his income tax liability. How to ascertain the turnover? There comes various issues. Whether the assessee is a GST registered, then the GST turnover can be taken. If GST turnover is taken, whether it is matching with the turnover which is appearing in the balance sheet. This is one of the issues. So when it comes to income, whether he has disclosed all the incomes which is earned by him, that is another area which we need to look on. Expenses. Again, what are all the expenses which has been booked in the P&L, has been appropriate, and there is no false expenses being booked. These are all the prime thing when we come to preparation of the profit and loss account. Next come the investments. When it comes to investments, what are all the investments he has made? Whether the investments are backed by the income, whether he has obtained any loan for investments. All these things has to be kept in mind. Next is the related party transactions. This is one gray area where when it comes to non-corporate individuals, finding out who are all the related party, it is something which is needs to be taken care, because the assessee may not be in a position to give exact relations which has exact transactions which he had made with related party. Most of the assessors, even when we put these questions to them, without applying their mind, they say there is no related party transaction. They do not understand the consequences of these related party transactions. Next comes the claiming of exemptions. This is one area when we say what is the investments you have done, what are the exemptions available, whether we can claim LIC, what you have invested, that is you have paid LIC, what is the amount you have paid, tuition fees, what is the amount you have paid. We ask the breakup. Most of the same, sir, claim 1.5 lakhs, sir. But that is not the way we can proceed with these kind of clients. We should see to that the exact breakup is being obtained. Next is issue 2, issues in availing finance. What is the requirement of finance? Why the assessee requires a finance? To what purpose is going to utilize? That we need to find out. In n number of cases, we have seen that the loan amount will not be matching with the turnover. This is because they apply loan and get in the name of business. They invest in some other business. They invest in personal property, and so many diversification happens to their funds. This is what we have to look out. What is the requirement of finance? Next comes the actuals which is presented. This is one thing we should keep in mind. What are the actual figures they provide, and what is the figures which has been presented to the banker for availing the finance is one other an area which we need to concentrate before signing any financial for these non-corporate individuals. Lack of vision in business. This is one particular item which these accounts may become bad. If the assessee doesn't know what he is going to do with the finance or what he is doing with the business in the near future, it will be difficult for us to ascertain whether the loan obtained is proper, whether the assessee will be able to repay the loan. When we are certifying the financial, we should see to that the trustworthiness or the creditworthiness of the assessee, so that based on our certifications, the loans are being dispersed by the bankers, and we should see to that we are answerable to the bankers as such for the loans granted by them. When it comes to this lack of business, all these things, no, main crux is the diversion of funds. This we need to find out in such a way that there is no fund diversion, the amount has been utilized properly in the business. Next is the inappropriate working capital assessment and disclosures. This is one important area where we see in this non-corporate individuals, whenever the bankers ask for any stock statement or they ask for any stock records, they produce something, and when it comes to income tax purposes, they give us something different. So we should see to that the working capital assessment made by the individuals are proper and they disclose it in a proper manner to the bankers. Diversion in business, this we have covered. This is one of the area where most of the individual businessmen, they venture into multiple businesses. They do not disclose all the business to us, and that needs to be taken care while preparing the financials and signing the financials. So next comes the preparation part. In preparation part, the availability data, data integrity, and the risk associated with the data is the three main areas which we should look into. When it comes to availability data, we should see whether the accounts, tally accounts are drawn up. They are providing bank statements, GST returns, expense vouchers, loan statements, investment details, personal assets or wealth has been properly provided. Next comes the data integrity, whether the data is complete in all aspects, whether it is accurate and whether it is appropriate. These three things needs to be taken care with respect to data integrity. And what are the risks associated with it? The risk of wrong presentation, risk of wrong computation of income, risk of inaccurate working capital assessment, risk of inaccurate net worth calculation, risk of compliance with applicable laws. This is one of the things when it comes to non-corporate individuals. There are various laws which are applicable to any business person. Ascertaining of the various laws is mostly not done by the non-corporate individuals, since they deal with a small value of turnover. But that doesn't mean they have given some exemptions, that they should know what are the laws they should comply with. And risk of non-compliance with accounting standard. This is one thing which we should ponder upon and see what are all the compliance requirement with respect to financial statements. And many of us think that there is a little compliance is required. Of course, there are various exemptions which has been provided for the preparation and the presentation of financials of non-corporate individuals, the MSMEs, and like so. But that doesn't mean we cannot totally ignore the accounting standards. A set of accounting standards are applicable that we will see how to go about it. So when it comes to presentation, so assurance, whether we are providing any assurance engagement, this is with respect to non-corporate individuals. When it is under 44AD, when we are signing any financial statements, normally 44AD cases, we are not signing the financial statements or not preparing preparing the financial statement, if we prepare, we have to see to that what is the kind of assurance we are going to give him, and accordingly we should draw up our report and ethical issues and what are the cost benefit associated with it. With respect to assurance, what is the level of assurance on the financial? Whether we are going to give a complete audit report as stipulated by RBI with respect for loans more than 25 lakhs, or we are going to get a limited review, we are going to do a limited review on the financial statements, and all these things has to be ascertained at the time of audit engagement itself. Then we should see the compliance with financial framework. What is the financial framework under which the financial statement is going to be prepared? It is under a general purpose financial framework or a specific purpose that has to be ascertained. Then we have to see what are the applicable accounting standards and the compliance of the accounting standards. Then comes the audit part, where we have to see what are the auditing and assurance standards applicable, whether we have applied it in proper manner to see to get an assurance or the level of assurance that is required for the financials, and compliance with other laws and regulations. Though there might not be any reporting requirement as such due to the postponement of no-clerk class in the new code of ethics, the consequence of non-compliance with other laws has a great impact on the business of the assessee. As such, we not only being as an auditor, as an advisor to the client, we may be required for us to point out what are all the non-compliances, what are all the consequences. This is also required as per our code of ethics. For any deviations or anything which is coming across during the course of our audit, we need to inform the management. Next come the ethical issues. When it comes to ethical issues, we should see to that whether the 5 pillars of the ethicals are not disturbed and there is no disintegration or there is no impact which has been made on these 5 pillars with respect to integrity, objectivity, professional competence and due care, professional behavior and confidentiality. This is playing importance in the particular this year onwards. It has been there in the previous year also, but it comes more important in this financial year because the code of ethics, new code of ethics, which has been made mandatory from 1st July 2020. With respect to ethical issues, we should see the 5 fundamental principles are not affected and we should evaluate the various threats. The various threats we need to evaluate are the 5 threats, which is the self-interest threat, self-review threat, advocacy threat, familiarity threat and intimidation threat. All these 5 threats has to be kept in mind before signing the audit of non-corporate individuals, those financials which we audit. When it comes to the various applicability of this is what the institute pronouncement with respect to the new code of ethics which comes from 1st July 2020, which we should keep in mind. Next, various other publications which we should keep in mind are we have listed it, Code of Ethics, Volume 1 and Volume 2, Financial Statement Framework, Accounting Standards applicable to Level 3 entities. I have said as Level 3, but now there is a Level 4 entities also covered because they have expanded the levels to 4 levels. So mostly now Level 4 entity will be applicable to the non-corporate individuals. SQC 1, the quality control for firms, SA 200 overall objectives, SA 210 terms of audit engagement, SA 230 documentation, SA 260 communication with those charged with governance. This is what I said, no, whenever we come across anything which is not complied with respect to other laws and regulation, we need to communicate with the management, that is the individuals. Auditing or accounting estimates, including fair value accounting estimate and related disclosure, going concern, of course. Then comparatives, whether we have to provide the comparative information, we have to check with SA 710. Then comes the two crucial thing, SRE 2400, which respect to review of historical financial statement. With respect to assurance standard, whether what is the level of assurance we are going to deem. If it is going to be a complete audit, which is we have to cover under a general audit standard SA. When it comes to review, just review we are going to do, we have to see to that we are complying with SRE 2400. And if it is a very limited purpose, we are not giving that much assurance, there is a compilation standard engagement SRS 4410. Normally 44 AD cases where we are not only certifying for limited purpose is SRS 4410 will apply, and we should see to that we are complying with it. And the guidance note on audit of accounts of non-corporate entities, bank borrowers. With respect to any bank borrowing, you should see to that this guidance note is been taken care. And there is a practitioner guide to audit of small entities. SAE 3400, examination on prospective finance. This is why I have included this. Now, whenever this kind of non-corporate entities ask for financials to be signed, they again ask for provisionals and projections to be signed. We should see to that the particular standard is being properly dealt with. And cost benefit. This is one area we should see to that. Whatever the various issues that has we have to keep in mind, we should also see to that the fees charged for the engagement as appropriate with respect to time spent during the year and time spent after the year of the assignment. And when it comes to various issues, we should keep in mind the closeness to clients, tax evasion, which is one of the things we should not encourage, or we should not be part of the tax evasion. If you think, or if you come across that the assessee is going to evade tax, we should disengage from the particular client. And again, funds deployed and funds diverted, that has to be taken care. And the owner with those start with governance. These kind of individuals mostly, they do business in the spouse name or relatives name. We should see to that the person who is actually doing the business and the personal who is actually the owner. We should see to that the what is the relationship between both of them and how it is being dealt with. And these are all the issues which I wanted to highlight with respect to non-corporate individuals. And thank you for your patient hearing.